GKFX Prime presents the Market Analysis Webinar.
Hello everybody and welcome to another edition of the weekly webinar. Well, we start a new week testing major yearly lows in the British pound and in the euro, getting a little bit of a rebound off those levels, a breakout to new multi-year highs in dollar yen, so some potential breakouts going on, or potentially those support and resistance holding. That's going to be a key question going into the week. We've got a number of central bank meetings this week which could create some volatility in the forex market. We just had the first round of the French presidential election over the weekend. Didn't cause too much of a stir, maybe a little bit of a relief bounce in the euro, owing to the fact that incumbent French President Emmanuel Macron came out ahead. So lots to talk about. Any questions from you guys, please drop a comment in the video. We love that. Otherwise, if there's some other markets you'd like us to cover, please again drop a comment or just hit the like button. Just click that thumbs up and that really does help us out a lot. All right, let's get started with the analysis. Let's start with the forex market. We'll move through to commodities and then indices and then crypto after that. So starting with the euro, here's our daily chart. And this is the test of the multi-year lows I was talking about. Now we actually had a spike low, so we haven't actually probed into that spike low, which as we're all probably pretty familiar with, is down here at just above 108. We've actually bounced in the last couple of days at the end of last week around 108.30, and now as we start the new week pushing above 109 again, so maybe a bit of a bottom in here. Okay, so we haven't tested the spike low, but at the closing level it tends to be the important one, especially on the daily time frame. And so getting a little bit of a rebound off these levels. Now I'll drop down to the 4-hour chart, but just before I do, worth seeing that overall very much a downtrend, right? The 50-day moving average comfortably below the 200. It's all kind of sloping down in a pretty comfortable downtrend, which has been in place for a while, a dollar uptrend obviously. And more recently we've had this rising channel which the euro broke down from, and now it's just testing these lows. So potentially a double bottom, but this pattern is bearish, breaking down from a rising channel, something more like a bear flag as we talked about last week. And so maybe we just get a bounce back into this channel somewhere. So that would maybe come in up around, depending on the pace of the rebound, right around 110 is obviously the round number, and that could be where this channel, which is broken, retested, and then we roll over again. Potentially would be like a bearish scenario. If we move back through into that channel, it would suggest that it's no longer in play, and then actually we're more in just a sideways range still, and that would imply to me a retest of the 50-day moving average and the top of the range. That's if we get back above this rising channel. I think that's just a bit clearer to see on the daily chart, but if I drop down to the 4-hour, and we pay a bit more attention to what's going on generally. Here's our rebound off the closing levels on the 4-hour chart. Again, kind of ignoring those spike lows, putting a little spike low here, and then we've rebounded. Tried to sell off from this nearby resistance. So I mean, I've got it affiliated with those lows, but actually more like this. We've tried to get up above here, sold off, but we've held on to the short-term resistance here. So rallied into that resistance, pulled back. This resistance through here held as support, and we're rallying back again. So we're trying to obviously make our way through this resistance, which is about 109.40, I believe. 109.30 to 40, yeah, in that vicinity. So this is the shorter term breakout area that we're looking for to confirm that there's actually a bit more bullish momentum in play. Even in the 4-hour chart, the moving average is pointing down, but obviously they're a lagging indicator. So if we're talking about a market reversal, you know, they're not going to tell us that until the market's already reversed well in a long time ago. They're just confirming previous trend. So potentially the bullish scenario here is a breakout through 109.35, and that could, again, as I say, take us back up to this rising channel where potentially there's some selling opportunities up around 110, which would sit right in the middle of these moving averages. It's 110, and it's the rising channel line. So a few reasons for a bit of a drop back there, potentially resuming this longer term downwards trend. For the time being, it looks like the market's trying to find a base in here, not quite able to break down through the annual lows, so get a bit of a short-term rebound, but the longer-term trend would tell us that it doesn't last. Some implications that it will actually be more durable is if we get above this confluence of resistance I was talking about, and that would to me suggest a test of the top of the trend, the range rather, up here as I mentioned on the daily chart. So similar-ish picture on the British pound. If I switch over there, here's our daily chart, and with the British pound we actually did make new year-to-date lows last Friday. But we rallied off the lows, and a similar little thing has happened at the start of the new week. We've sold off, but the day's not closed, obviously, so we don't know how Monday closes at this stage. But it's looking like a similar tail at the lows, and so potentially the beginnings of a double bottom here, or at least a rebound towards the what has been the resistance to the range, which was these prior lows of support, and kind of apart from this false break here, see through here, this most recent peak, this has been the resistance. So if we can hold this support for the next day, which is basically 130, it would suggest to me a push back up to this level again, which is about 130, 150 to 60. So 130 holding, and obviously it's a big psychological level, so you can imagine there are some big players coming in and buying at that level, hoping for several hundred pips, if indeed we have found a bottom here. So good level to be playing at, the 130 level, and if we do get a close below 130, I think that's the signal we have to tell us that the longer term downtrend is in play. And then from our 4-hour perspective, obviously here's where we're rebounding off that long-term level. You can see the kind of spike lows on the short-term chart, still very close to the support. So if you are bullish here, still some decent risk to reward to get up to the top of the range. We've only just spiked mildly below 130, but to get to the top of the range again, it's over 150 pips. So, but if we do close down here, even on a 4-hourly basis, we've not even done that yet. That would probably indicate that the breakdown is on, and again, we're looking for more of this kind of price action where we break the support, hold the resistance. Maybe the resistance takes a while to hold the support temporarily, but then the support gives way. Right, this is characteristic of a downtrend. Here it's been kind of sluggish because we've been trying to get through this major low. It's been more of a kind of broader sideways move. But more recently, shorter term, it's been downtrending, right? So maybe this downtrend reverses, and we push up to the top of the range, and then at this stage we can start talking about maybe breakouts to even higher levels to test 133 again, maybe. But for the time being, obviously it's bearish price action, and we're looking for maybe a rebound off the lows to sell into the resistance, or a, as I say, a close below this level for the breakdown trade. Dollar yen, as we correctly said last week, is still very much in an uptrend, and our bias should be to just follow the trend, even though there's a chance of a reversal with a big down move like that. We're always mindful of the idea that there could be a top, and there still could. And if you're going to trade the top, it's about now, which is the best risk to reward. But we are, again, we've not closed the day, so we don't know how today. If there's a big reversal lower today, that would be our confirmation that a potential double top reversal is in play. A breakdown through the neckline down here would be the confirmation of the pattern. But as I said, just this would be a close for the day under this resistance level, would be a confirmation that the double top trade is potentially on, and then you can take the kind of high risk to reward trade down to the neckline if we saw that kind of reversal happening here. For the time being, as I say, the trend has been up. The price has held above the 50-day moving average. It's done the kind of price action we like to see and we like to trade, which is here's a resistance, break above it, hold it as support, break the resistance, make a new high, and then doesn't even get back down to these resistance, holds in a short-term range, breaks out of the range, tests the top of the range, rallies up. Now we're at the same thing again. So testing the resistance, pulling back a bit. This is an uptrend scenario, right? So for the time being, we want to keep trading any of those pullbacks to those previous highs, assuming the uptrend continues. But if we do get this big reversal on a daily basis, especially at the high, basically the market fails to close above 125 again, it would suggest that at least over the next few days, maybe sellers will retake control of the market. You can see on RSI, I don't always mention it a lot, but we are pretty overbought on RSI, but obviously during an uptrending period, like back here, we were overbought for this whole trend. So the fact that we've actually just moved back into overbought territory could suggest we're just starting a more prolonged uptrend again like that. And finally, worth mentioning, if we do get this false move up and a close down below the level, a close down below the 70 level would be what we want to see as far as a momentum confirmation. Okay, switching gears to metals and to gold. Gold on a daily candlestick basis has been pretty choppy, pretty sideways, but what you can say for it has been that, well, a couple of things. One is that it is held above the 50-day moving average pretty comfortably. It just had that one tiny little dip below and some good buying came in. And then right at that closing level after the test of the 50 DMA, it held that level consistently in a very short-term range. And what is also interesting is that while gold has been kind of consolidating here in a bit of a kind of sideways market, bond yields have been pushing very much higher. So it's been a real kind of bear market in bonds, government bonds particularly, and that means that yields are going up, and normally gold doesn't like it when yields are going up. Also, the dollar's been going up. So the dollar's been going up and yields have been going up, both of which are normally bad for gold. But gold has been going sideways, and in fact, it's even challenging the top of its range. You can see here. Let's drop down to the 4-hour chart just to show that in more detail. Here's that one false breakout. We dropped right down, tried to smash lower, got bought up big time, and then we've been trading sideways. And a good healthy sign is that we haven't challenged these lows again. We've basically held the midpoint of this trading range as support, and now we're up testing resistance. The most likely scenario, it looks like to me, is that we break the resistance because we've moved up to a higher level of support, and despite these difficult correlations in other markets, gold's still acting kind of strong. So if, for example, we do get a bit of a bounce off the lows in euro dollar, where i.e. the dollar's weakening for a little period, that could be all that we need to get a good breakout here in gold. So gold, I think, is setting up pretty nicely. If you are bearish in gold, well, this we're right at the resistance, so obviously selling at resistance is always what you want to be doing. Selling at resistance, buying at support. This is key trading. So if you are bearish, here's the level. If you're a bit concerned to buy here, obviously we've got our next high up here. So this would be, if you just think we're going to push a little bit out of this range, but not get much beyond this previous peak, and gold's ready to roll over, this would be the next point to look at for any bearish trades. To me, it looks like it's breaking out. It looks like we had that big sell-off. People got, whoever wanted to get out of gold did, and then there's been an accumulation phase, and we're about to push higher again, is what it seems like. Let's have a look at silver. Here is our daily chart in silver, and you can see same thing where we'd smashed straight down to the 200-day moving average, and then we didn't make any progress after this big spike low. We rolled over, didn't get down to the low again, pretty much held the 50-day moving average on a closing basis almost perfectly for several candlesticks, and now we're starting to accelerate up again. So this whole bit of price action here, to me, it looks like a kind of a base is being formed around here, and then here's our resistance through these candlesticks, and we want to see a breakout through there, and then that kind of is overall telling us that this bearish price action is done. We're breaking out this resistance, we're breaking above this kind of downtrending scenario, and we're pushing up to the highs, maybe up to the next set of highs. So again, I think silver supports the general positive outlook on gold, and even here dipped below the 50 level, but didn't go anywhere close to oversold during this kind of bearish period, and back over the 50 level into like a more positive buying environment. Shorter term, again, we are, even though to me it looks like we're going to break resistance, I don't know when, I don't have a crystal ball, and we may sell off again from this resistance level. So again, if you're bearish, even over the short term, then we are challenging a resistance, which tends to be the best kind of time to sell. We've got a confluence resistance from these two previous peaks and the 200 SMA, which is not, it's sort of worked kind of well. It worked okay here. The market's kind of been respecting it. And the other thing is the 25 level. So 25 level, 200 SMA, and the prior peaks might create a bit of a sell-off from there as resistance. But again, I think the market's forming a base through here and readying a breakout. Moving on to the oil markets. Somehow I can't put it up. There we go. Here's our daily candlestick chart. Now, oil, slightly different picture to gold, despite both being commodities. Obviously, it's been a rip-roaring market for a long time. Saw that huge sell-off, and I think this has undermined confidence a fair bit. Quite a few people got liquidated in this massive drop. We've got the kind of optimistic bounce off the previous resistance, which acted as support alongside the 50 DMA, rallied up, but what was that, a 61.8? I think we've done this before, but pretty much a 61.8% retracement on a closing basis, and we've rolled over back to support. So this looks to me more like support's going to give way, but again, we have held the support, which in the near term is encouraging. I mean, just the fact that we held the 50, couldn't make a new high, and then dropped back and broke below the 50. To me, it just suggests there's lower prices. But what I've seen other people write elsewhere is that maybe what we're looking at here is an A, B, C pattern, where actually if I delete that and I kind of copy this one, that basically the A and then the B is a bit shorter, and then C should be roughly the same length as A. I mean, that would take us back down towards the 200-day moving average, maybe even a dip below 80, but roughly to 80, and also to this major resistance through here, the previous peak through there. So maybe this down leg just has a bit further to go. But it's not to say that the overall bullish market is over. We could easily hold above the 200-day moving average, but it just looks like the shorter term price action potentially has further to go if you're going off that pattern, which doesn't have to come off at all. But it's something to bear in mind. And then if we drop down to our 4-hour chart, we can obviously look for the confirmations in terms of the highs and the lows. It's bearish price action right now. There's our support, broke, tested as the support as resistance. It held, came down to the support, held temporarily. Resistance also held again, finally dropped through the support. Now we're back at the major longer term support from this March low, and we're consolidating through there. Now, there's been a reluctance to push us through this major level, and it's possible we get another pop-up through 100, and you can kind of see what's been going on overall, is that we had a drop through 100, bought up, sold above 100, bought below 100, sold above 100. So the market's kind of chopping around 100 right now, and I wouldn't be surprised if we could break this little short-term resistance here with a close above, we get another pop-up, maybe towards this old resistance here, above 100 again, and then maybe back under 100 again. and maybe another challenge a bit of the support. Moving on to the stock market, potentially head and shoulders top here. So the left shoulder, head, right shoulder, and we've just kind of created the right shoulder on the side here. Bit of a kind of double head in a way. We made it above the 200-day moving average, tried to buy up from it here, formed a lower high, and dropped down and formed a lower low. So if I pull down to the 4-hour chart, this could just be a kind of a correction period. Basically, we're just like maybe in just a channel here. So coming down, maybe we dip slightly below this support, and we take out some stops, and people and big institutions buy in up here, and maybe this is just a flag, and we break out to the top side. I think that's entirely possible. I'm always mindful towards the upside in the stock market, but for now the price action is bearish. Same kind of thing where here's our support, come down, make a new low, rally up to the old support, it turns into resistance, take out the support, rally up to the old support, forms it as resistance. Now we're coming down to the old support, and if this same pattern continues, this support should give way and then act as resistance when the price comes back to it. We do have the 200 period moving average on the 4-hour chart just below, but I don't think that's too significant for the stock market. So overall trend is bearish, but just keep in mind, I mean, this channel is not exactly ideal. It's more giving you a kind of a rough feeling for kind of what's kind of the lines that you draw in these kind of channels. They're not meant to be perfect. It's just meant to give you a general feeling as to what the price action is. It's a bullish market, a correction, and then a resumption of the bullish market. Could be what's going on here, or as I mentioned, it could actually be a top with a left shoulder, a head, a right shoulder. If we convincingly take out this neckline at 4,450, that's the major support. If we drop below it and then quickly close above it, either the same day would be ideal, but even the next day. So if maybe you even try the breakdown trade, and then the very next day the price closes back above, and then you're kind of stuck with this short trade you didn't want. Well, okay, just turn your bias around, drop the short trade, and understand that there's been a false breakdown, and get ready for a rally up through into the top of that channel that we were drawing. But obviously, if we don't get that move up through the support, then you're right to sell the breakdown and look for much lower prices. I mean, for example, if it is a head and shoulders, which is it's certainly not a textbook example, but then again they never are. Then we'd be looking at a breakdown, taking us right back down towards, down here is where we kind of broke out into the uptrend, and actually this target takes us kind of roughly into that area. So that's kind of nice, a nice little mirror situation, which I like to look for in the market. All right, last but not least, Bitcoin is looking rough, to be honest. So what could be going on here is we broke out to new highs, and then it's a rally up to new highs, made a higher high, and then just a pullback to the 50-day moving average, from which people can buy the dip, and this was this high through here. So and you can see that's kind of where we had the breakout from. Pull back. Let's see, that looks like it's roughly 50% of that rally. Let's see. 61.8 actually, just where we got down to. So pull back 61.8, 50-day moving average. We could get a decent little pop from here. The key thing for me will be what happens at this resistance. Say we do get a pop from the 61.8% retracement and the 50 DMA and this old resistance. There's a confluence of three supports in this area to suggest that we can get a bit of a bounce. We did already try a little bit and kind of failing, but say we do get a pop, then the big question mark would be what happens at this resistance. Does it fail? Does it hold rather? in which case that would be meaning a drop down to the bottom of the range and quite potentially a breakdown, a major breakdown in Bitcoin. But if we do pop up through this resistance, it suggests that we're making higher highs and higher lows, and then we're looking at something where like higher high up here, and then if it's really is textbook, we'd pull back to the resistance again and kind of carry on. That's like the bullish one, right? The bearish one is more like we come up to this line, it holds again, and we're bound to the bottom of the range again. That's if this level even holds. Maybe it doesn't even hold, and we're just rolling straight over down to the bottom of the range, which I would say is probably even more bearish. Alrighty, that's it. Thanks very much for watching this week, guys. Good luck trading, and please make sure to subscribe to the channel and click the notification bell so you see these when they come out. Thank you.